Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This is the show that looks at weekly setups across the U.S. and Canadian markets. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed for intra-week updates. Lots going on with the market. Continually wants to climb here. We're going to talk a little bit about that. I mentioned last week that I wouldn't mind talking about industrial metals and why I think they're an important component. Obviously, much like the transports, when the transports are going up and the industrials are going up, it should coincide with industrial metals starting to rise. So we want to talk about that. Steel stocks, same idea. And the marijuana names are starting to test their relative strength trend lines. And the reason that that becomes important is bubble stocks can help us a little bit with timing. Typically, you'll see a bubble stock burst. And when that burst happens, then you might see the rest of the market start to wane a little bit. Not suggesting that marijuana is just a bubble stock like Bitcoin or whatever. It can have lasting, long-lasting trends, but a lot of the relative strength lines are starting to be tested on those names. So I want to talk a little bit about that. So here's our current market setup today, and just wandering in yesterday's range. So we've made lower highs than yesterday and higher lows than yesterday. So nothing really too dramatic out there. Some big names took a tumble today. Electronic Arts is really down hard. Take-Two Interactive really down hard. Activision following the trend. So those gaming stocks just getting smoked this morning. Some other retail names falling. Here's Apache, the oil name. So as we continue to move forward here, we want to keep watching the market for the heartbeat, just making sure we're on the right side of the trend. This is the intraday view for SPY. So this is a 10-minute chart. Let's not, the idea is just to kind of get a feel for what's going on. And you can see for the last 5 days, it's been, not dramatically higher, but nonetheless still running up, 264 to 274. So that's 10 points on 260, roughly 3% in a week. You can get by on that. And the one thing that's a little concerning, and again, this is a 10-minute chart. Let's not be too fussy here. This is showing a little bit of divergence, and I'll click on that chart a little bit, and we'll go look at a 60-minute chart. Here's the SPY chart. This gray line here is the 50-day moving average. This horizontal line right now is the 200-day moving average, and the problem is we're testing it. That doesn't mean it's bad or good. It just means we're testing it. And so anytime we fall below it, obviously, in order to get back above, we have to break through it. I did a huge blog on the weekend, on Sunday actually, and one of the blog comments in there, or one of the subsets of the blog, was a discussion about the 200-day and why do people care. And some people don't, but I do. I think the 200-day is a meaningful place to look at. And one of the reasons for that is if you're a computer programmer and you have to try and program whether or not a stock is in an uptrend, if it's above its 200-day or 40-week moving average, it's probably in an uptrend. If it's below its 200-day, that's a concern. Now, it could briefly be below, but the 50-day could be above. So what happens is they use a combination. They'll use, if the 200-day is above the stock, but the 50 days below the stock, what is that situation? Or they'll do it the other way. If the price is below the 200-day, but the 50 is still above the 200, so they'll use moving averages as kind of directional trend indicators. And clearly when everything's in bull mode and the 50 is above the 200 and everything's rising, that's very bullish. Nothing wrong with that. When you get into this situation now, this is where it becomes complex, because you've come off the low, you're trying to get back through the 50, in this case the 10-week, and now you're at the 40-week. Now the real question is, does this become resistance? And so if you haven't had a chance to read the article I wrote on Sunday, it's under the Canadian Technician banner. The blog article's long in itself, but there's quite a few weekly videos from last week too that you might want to check out. And the reason I highlight that is understanding why the 40 week is important will really help you stay in tune with the market. And when we get to this 40 week level, it doesn't mean that we can't get through. Every time we have to get through in order to get back into a bull market. So it's not impossible. It just has to get done. But you can see back in 2015, we got above it. And then we spent, what, almost 3 months trying to stay above it, and eventually let go. And we ended up making that 2016 low. The 2016 low was barely lower than the 2015 low, but we all talk about the 2016 low, and that's because it was the last one. So in this major low here, we started to run up, and now, you know, it's been 3 years. It's a pretty good run. And so normally our business cycle is 44 months. It can go 48, can go 36, whatever. You're near the end of the business cycle. So what we would normally expect is 3 years up, roughly 1 year down. Doesn't tell us how far it might drop to kind of mark that business cycle low and then take back off to the upside. So there's a few things going on here. One is the business cycle. One is where we're at on the 200-day moving average. One is, you know, we've rallied for 30 days for the most part. On the daily chart here, we've had one red elder candle. You compare that with the period from October, November, and December, we only had like 10 green candles in 3 months. So this has been a pretty good run, and a lot of people are drawing it out as a bear wedge or whatever. It's not uncommon that when you come off the low, you have really wide-ranging bars, and then they start to normalize as you get up in here. So that's going to create your wedge pattern. Anyway, the bottom line is we're at a point of resistance. Every index is at it. Oil's at it. I think, you know, the semiconductors, there's just so many of them. Let's just go to the semiconductor space. And here's your daily. So we've pushed above here just today. We're hovering around this level. So that's quite a bullish signal. I want to just cover off the marijuana stocks while I'm here, and then we'll jump into the industrial metals. So this is one of the leaders in the marijuana names right now, Kronos Group. And what you find on this is obviously the price move has been relatively parabolic off the November lows. So we went from 10 to 34. Most people would call that parabolic. And now we've pulled back almost $8 on this. This is the Canadian version of the chart. It's also traded on the US as just CRON. But the point I usually want to watch for is when these relative strength trend lines start to break. So you draw a trend line under here, that would be concerning. So in this case, you're starting to get a test of this relative strength trend line. And what is all that means is that what was outperforming stops outperforming. And usually when that happens, it's worth paying attention. So here, the stock went gap to $18, and immediately the relative strength broke, and it spent 3 weeks just consolidating. But not only that, it pulled back almost 30%. So when you're in these wild names, it's pretty important. But I also like to notice that this long PPO trend line is also starting to get threatened here. And if that was to break while the relative strength is breaking, I would definitely want to have some sort of insurance on the stock or on the position. And you could, again, see when the volume starts to accelerate, that those are good places to be cautious. And, you know, all of them have had pretty major pullbacks after that. And here we sit with a 15 million volume day showing up again. And, you know, typically those are marked pretty close to the highs. So anyway, all of that to say, you know, if we just went through all of these marijuana names, Canopy Growth is rolling over right at previous highs, starting to get a crack in its relative strength. PPO is already rolled over, volume was falling off, all kinds of things. So here's Aurora Cannabis. Same thing, you've got an upsloping trend line. It really wasn't doing much outperformance in relative to the S&P. So if this is going to start to break here, I think you want to be very cautious. And again, if you're going to short a stock, don't short the strongest one in the group. Go find something with a weak scooter already. They'll probably fall a lot faster. So I'm not encouraging anybody to try and short a strong name in the group. If you're going to, if you're trying to make money on the downside in a move, don't pick the strongest one and watch it crack. Pick the weakest one and watch it plummet. It's just a little easier that way. So here's Hydropothecary again. Lots of things making kind of double topping structures. This one's way bigger, but you can just see, you know, if these trend lines in relative strength start to break, you know, don't be surprised. And you're getting the rollover signal. None of them have earnings, so if you're thinking you're just in for a long-term hold, go ahead. But I wrote an article last week called "Is Marijuana About to?" And everything was a bull market at the time of writing on purpose. But my point was, pick something. Like, just don't think there will be a sign at the exit, but pick something that you can draw a line under, either an uptrend in the price or an uptrend in relative strength. And I usually find, you know, an uptrend in relative strength is pretty favorable. So if we just took this marijuana ETF, grab this line, and just move it over here, what kind of slope is that? Move this one over here, what kind of slope is that? You know, they were pretty good lines in the past, so just use them as a judgment point. I don't think you want to watch this fall another $4 or 20% before you get out. So all depends on your trading style. But for me, I'd probably want to use something, whatever, as aggressive as possible if I'm in a really fast moving name, and I would try to pick it that way, not I'd be more assertive with my line slope. Like, I don't want it to be down here. I want it to be higher up to kick me out quickly and try to capture the majority of the gains. Now, these things have been moving for a while. They've been up almost the whole month. This is 13 to 22. You know, it's almost 100%. Anyway, I think I made my point. Don't sit there and expect it to be great. And you can see how the scooter line, this is the ETF for the Marijuana Life Sciences, drops down, falls really hard, rallies back up, falls really hard. These are huge moves. I mean, this was a 50% haircut. This one was a 30% haircut. So it's okay to try and capture profits and then wait and get back in when the thing starts to break out again. Anyway, okay, off to copper. The one thing I want to talk about today on copper is, notice the number of stocks here. So just, if I just put up this RRG chart, and again, for those that aren't aware, relative rotation graphs rotate around some center point. In this case, the benchmark is the TSX, and we could use the SPX, whatever we want to use. But the thing you want to notice is, look at how many stocks are either in the leading quadrant or in the improving quadrant compared to the declining quadrant and the downright weak quadrant, lagging. So you notice that 2/3 of them or 3/4 of them are up in this top area, and that makes for a pretty good place to look. And what we want to notice on RRG charts in general is, what is the direction of the line? So if we were just to pick this NUS right here and just click on it, it'll highlight it. But what we want is something pointing northeast. So we want something heading up and to the right, and not so much down, and not so much down and to the left, especially when they start to turn to the left. This graph is laid out two ways. So this is the momentum, and this is the ratio, relative strength. And so if the S&P is sitting here, when they're starting to slow down in momentum, they'll fall this way. When they're actually starting to underperform in relative strength, they'll turn back. And this is a weekly chart, not a daily. The Chronos chart I just showed you was a daily chart. But the idea being, when you look at this stock or this chart, it gives you an idea that a lot of these are looking pretty good. Now, Hudbay Minerals, let's just pull up a little graph. I mean, that thing's been up and to the right really nicely. Pretty enjoyable stock to own. Silver Bull, not so much. It looks like it's starting to weaken here with a few more big red bars. So anyway, as you look through these, you can just quickly highlight over them. Let's look at some of the big ones. Here's BHP Billiton. It made new 52-week highs last week or the week before. And those are very bullish. Now, here's Rio, also an Australian stock, but listed in the US, and it's been climbing nicely. These are both beautiful charts. Teck Resources is just testing its 200-day moving average. As I mentioned, that's a bit of a friction point. And Vale is down here quite a bit because it had a tailings pond break in Brazil, and there was like 80 people that passed away. So that was very unfortunate. And obviously the stock suffered a little bit on that news. But more importantly, I think for Vale is they've had a couple of these now. So I wouldn't be so quick to try and jump in and catch a falling knife here. They might undergo years of court review there because they're one of the bigger employers. But the problem is, now that they're starting to have problems with their tailings ponds, I think they're going to feel some heat for a bit. Anyway, back onto these stocks. I think the nicest place that you can find a stock is right in this zone here, when it's going from lagging to improving. So it starts to point northeast. And again, the stock just has to start picking up. So if we turn off our highlight on that one and maybe go find, I don't know, let's just pick Freeport McMoran. The reason I want to look at Freeport, the actual chart has been drilling in the bottom right-hand corner and is trying to make a base here. And if we actually clicked on it, what you'll see is, this will bring up your default chart, by the way. What you'll see is it's sitting in this zone over here trying to consolidate between 950 and 1250. And even while gold has been running, Freeport's had no wind in its sails. I will say that the PPO is finally starting to change, and it's at a higher level than it has been in a while. So if there was something to get excited about, I think this bounce off zero is enticing. Now, again, it's still below its 200-day moving average, and we can go look at Southern Copper, and you just see, you know, these big downtrends are sitting here. They're trying to change behavior, which I think is critical, but we still have XLI, the industrials ETF, and it's getting better, but it's testing that 200-day previous resistance. All of this is critical to seeing it pick up. And I think the concern for me is there hasn't really been a whole bunch of volume show up here. The move has been straight up, but when volume continues to weaken, I think that makes it less compelling. And again, after it's been up from 59 to 75, do you really want to jump on the train now? So it might just need a pullback to try and consolidate some of the gains and then see if we can run from there. So while I'm not a proponent of adding when something is up, you know, this steeply, I would suggest start to put them on your names. And if we do get that turnaround in the industrials, and I usually like to look at it on the weekly chart, when we get this kind of trend line breakout on the PPO up here, so I would draw a trend line across that, that is a place that I'd feel more comfortable. And it might just take another wiggle here to get going, much like it did back here, where you got a second bounce and then that took an extra couple of months. And then on that couple of months, that was the way better place to buy, higher, low, all that kind of stuff. So we'll see if we get that set up. But I think it's pretty hard to add here after, you know, such a steep rise in all of these stocks. Okay, briefly, let's cover off one more thing. I'll just cover off gold. Well, yeah, let's do gold quickly. The point I want to make on the gold stocks is the top performers have really been flying, and I'm just going to scroll to the top quickly here. Here's AngloGold Ashanti, and this thing has just been moving up beautifully. It's at 2-year resistance. It still looks good. I don't see any reason to sell it yet, but we're starting to see some of the gold names, the weaker gold names, give it up a bit. Kirkland Gold just continues to climb up and to the right. Wesdome Gold Mines, this was my pick on Market Watchers Live the other day. And yeah, nice push, another 40 cents on top of that one, so 10% in a week. Silver Standard Resources, this one's pushing up, climbing nicely out of the hole. So, you know, these are, I think the blog I wrote was back mid-November saying, get on the gold train. It's starting to run and stay in the strong stocks. Now here's Oceanic Gold. That's pretty much a breakdown. And I think you want to sell when the chart's reacting so sharply, your PPO is starting to roll over. Let somebody else have it. This one's interesting. Largo Resources, they sell vanadium or something, Vanadium. And this is sitting right at its 40-week moving average. It's been an absolute monster from 33 to 465. That's 1,000%. It's pulled back significantly. It's at 280 or so, a little above 250, maybe at 265. And the problem here is if this doesn't hold here, you probably have to really let it go. Look at the volume that came into the stock, and now not so much. So I think the fact that it's not being bought up down here at the 40-week, and especially while the overall market is starting to improve, this scooter signal saying what was strong is no longer strong. And so I would be very careful on names like that. The Gold Miners ETF is right at resistance, horizontal resistance. So, pick your poison. These names have run a long way. Again, it's been 3 months or, in this case, almost 5 months. So be careful on the gold miners. I think they're starting to show a little bit of exhaustion. Some of the big names might still be able to push higher, but a lot of the other names are just starting to tread water. Okay. I did want to go around the world quickly and look at some of the countries and just show you what is out there. Let me go grab the Shanghai. And one of the reasons here, so the Shanghai so far is rattling around. This says February 1. I'm trying to figure out why it didn't update. Is that my chart setting? Or maybe it's been closed for Chinese New Year. That could be it. Yeah, I don't see anything saying that I picked a final date or something. So I think it's probably closed for Chinese New Year. So here's the Nikkei, and you can see this one is starting to, the bars are getting smaller, the rate of ascent is getting weaker, and it's right as we approach the horizontal resistance level of 21,000. So not really ready to get on board for the Nikkei here. And Hang Seng, this one's been nice, pushing up higher. Again, just getting up above the 40-week moving average. So another reason to be more cautious. Doesn't mean it can't go higher, but it's definitely a place to worry about. And obviously, we've got the tariff talks coming. The South Korean market just approaching the 40-week from the bottom, and it's still moving up at a relatively rapid rate. The Nikkei we just did. Don't know how that happened. Okay, here's the Indonesia, and it's double topping here, or has the potential to double top here, but I don't like the fact that the relative strength is starting to break. So when you start to see these emerging markets stop emerging, it's a good place to be careful. So if this relative strength was still continuing on, I would be happy. But the fact that it's been pulling back for 2 months here, I would be very concerned that this is marking, a more significant endpoint. So whenever you can draw these relative strength trend lines and they're starting to fail, don't hang around the party too long, in my opinion. This is the India market, and again, they have the best demographics, so it's not a market that you ever want to short. It's got so much going for it. But the problem here is the relative strength's been fading since, well, let's call it since the Santa Claus lows. And now you're sitting here just barely above zero on relative strength after breaking out of a really strong base. All of a sudden it ran up. And the reason this ran up, even though the market didn't do much, it was because the US market was falling away. Now you have exactly the opposite. The US market has been surging, and this market hasn't been able to build anything. I would just say if this starts to roll over as one of the best demographic markets in the world, its PPO hit below zero. And a rule for me is that when something goes below zero and rallies up, the next rally could definitely have the possibility of being like a final high. And it doesn't necessarily have to take out the previous high. It can. In the case of Canada, it did, and then it rolled over. in the case of another market like the New York Composite, it got up here and then it failed and rolled down meaningfully. So this is a really important place. Just because momentum is flat and at zero, after giving you kind of a I'm starting to get weak signal, it tries to rally and fails. And on that flat rally, more likely than not, and again, I wouldn't encourage shorting one of the strongest demographic markets in the world, but this looks suspect to me. Germany had a rough week last week. They actually closed down on the week while everything else was moving higher. And this week, trying to get back through the center of the Bollinger Bands at the 20-week. So that's bullish, helpful. Again, relative strength still underperforming. A bit of a concern, and it did give us the bear market signal on the RSI. So normally we'd expect it to go up to the 50, maybe up to the 60, and then start to break down again. And when that happens, again, it can go all the way back to the other side of the scale. But typically in a bear market, it will get stuck. It'll have somewhat of a rally, and then it'll get stuck around 60. And when you get stuck at 60, that's just an important place to be aware of as a trader. Now, you can see that the PPO also has a downsloping trend line here, and we'd probably be getting pretty close to hitting it. So careful what you're watching out there, because we're starting to see these other charts just not break down, but they're at a point where we'd expect them to start to have trouble. Okay, French market still up, having a good week. The British market flying, even though Brexit isn't resolved. So this one just keeps pushing higher and having a really good week this week. One of the nicest candles out there for any of the country indexes. Italy keeps trying to push higher here. Really 4 weeks flat, nothing to talk about. But the idea behind going through these markets is just saying, is the rest of the world starting to rally with the US, because they were underperforming for so long. And here's Spain. It's been a road out of town for a while, and we're up against that 40-week moving average right here and just sitting there in the hover mode. Doesn't look that bullish to me. Here it looked like it was trying to make a higher low, and can it get going? And it never did. It just basically rolled back over. And here we find the same thing, right? We're just up kind of at a bounce level, typically getting above the 20-week moving average, and then it stalls again. Nothing really to tell us to start buying this. Okay, so now let's finish with the S&P 500. We're right at the 40-week moving average, and I think the most important thing here as we go forward is watching what's outperforming. Very bullish to see the semiconductors have another good day. But the issue we have here is this could be a real meaningful friction level, and I would encourage you to go back and read the article that I wrote on the weekend, and it's under the Canadian Technician blog. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thank you.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.